Hi guys, it's me Jason, back with another video for you guys. So we have reached 150 subs. That's great, no? Okay, just kidding. So in this video, I'm gonna talk about the basics of candlesticks, how traders, big players, or banks or institutions, how they use these charts to make a decision whether they have to buy the stock or they have to sell the stock. And if this video gets 20 likes, I'll come up with a easy strategy which any beginners can use to make some money. Come on, who doesn't want to make some money? So make sure you like and subscribe this channel so that you may not miss out that special video. Now let's get into the charts.
So in this whole slides, we are going to see the basics of candlesticks, how a trader makes a decision whether he should buy the stock or should he sell the stock, or we also will see how a price reacts based on the buyers and sellers, and we'll also see why a price moves up or the price of the stock falls down. So the first slide will talk about the candle. So this is what is called a candle. This is an individual candle found by Japanese to trade rice like centuries back. So that's out of topic for now, but for now just so know that this is a candle. This is one candle with green body and this is one candle with a red body. So in this candle, the anatomy or the names of the parts of this candle are as, you see, this big, you see the small thin line, it's called the upper shadow, or it's also called upper wick. There are two names for it: upper shadow, upper wick. And this whole green body is called the body. They're called body or real body, anything is fine. And this small thin line is called lower shadow or lower wick. It's also called lower wick. And same thing goes for the red candle. So red candle, it's also called as bearish candle, and the green candle is also called as bullish candle, because markets or the stocks are a fight between buyers and sellers. Buyers are considered to be as a bull because they make they lift the price up, right? And that's why they're called bullish candle. A green candle is called a bullish candle because price from lesser rate went to a higher rate. But a bearish candle also is known for the seller's candle, or candle which describes as sellers. So they decrease the price from high price to lower price. We'll see in details in the next slides, but just for this slide, just know that this upper thin line is called the shadow or wick, and this is called the body, and lower shadow or this small thin line is called the lower shadow or lower wick. As I told, the price of a stock is dependent upon number of buyers and number of sellers. If there are more buyers, the price of the stock will go up. If there are more number of sellers, the price of the stock will come down. So it's always a fight between buyers and sellers, and one should know when they should buy and when they should sell. We'll come to know about in the next slides. So as of now, only the main thing about this slide is the wick, the body, and lower shadow. Now in the next slide, we'll see how a price reacts. So how do price move? Let's consider in the month of April, the price of a rice per kg is 200. Consider April 2020, during the pandemic time, during the corona time. So when during the pandemic time, there was huge increase in demand for rice. Many people bought rice and kept the stocks in the home because of lockdown, right? So there was increase in the demand of rice, so demand for buying rice. So what happened when the demand or the increase in number of buyers? So you see, all these are customers, or in other words, buyers. They were in huge numbers and they increased because there was demand for rice, which led to the increase in the price of rice per kg. So in May, what happened after 1 month, the rise of per kg went from 200 to 210. So in 1 month, the price increased from 200 to 210, which means there was plus 10 rupees per kilo. Per kg, there was a increase in price of 10 rupees. Why? Because there was an increase in demand. There were so many buyers. You see, all these were buyers who were willing to buy the rice, or whatever the price the market was selling or the seller was selling. And in turn, because of the increase in demand, the price also of the rice increase. As you have seen, maybe when there is too much people booking Uber cabs, you might have seen, because of huge demand, the price is hiked and all. And during normal days, the price is in the normal rate, right? So like that, due to increase in buyers, the price of rice went from 200 to 210. Now, so there were so many buyers, as you know, because there was increase in demand. Why? Because there were so many buyers. Now let's see how a candlestick can be formed based on that rise. So during, on the 1st April, this is called the open. So let's say the price opened at 200. Okay, the price opened at 200 and the price came bit down, which made it to 195. But when we became 195, there were so many buyers coming in, which made the price go from 195 to a peak of 215. So during the month of April, whole month of April, price went from 200 to 195. Then for when it reached 195, there were so many buyers which made the price of rice from 195 to 215. And after it reached 215, the demand reduced a bit and it came back to the price 200. So after that, after reached a peak of 215, it came to 210. So this price, the opening price of April 1st, this is called the opening price. So a green candle will have the open price in the bottom because the buyers increase the price from lower price 200 to a higher price 210. So that's why the color of the body is green. It's meaning bullish. In other words, there were so many buyers. Buyers were strong, so which made the price of the rice from 200 per kg to 210. And this top point is called the high of that month, and this point is called the low of that month. So in the month of April, from April 1st to it's this 30th, what happened? The price opened on April 1st at 200, and like after 3 days, the price went off per kg of rice went to 195, and then huge demand came because of lockdown. The price went from 195 to a high of 215 at around like maybe April 25th. And after that, in April 30th, at midnight, 12 o'clock, the price of the rice closed at 210. Alright, so this is a bullish candle. So this green candle represents bullish candle because price went from opening price of 200 to the closing price of that month as 210. Now I hope you understand what a bullish candle is, and I'll also show once again the older. So you see, in the bullish candle, this was a low price during that period. It can be 1 minute, it can be 1 day, it can be 1 hour, it can be 1 month. For this example, we are taking 1 month, and this point is the high price. So to 195, 200 was the opening price, and it went to a high of 215, and it closed on 30th of April at around 210. So That was all about bullish candle. Now let's see about the bearish candle. Now let's see in the month of May. In month of May, the rice per kg was 210, because in the before example we saw that the price closed at 210 at the month of, this was 30, and at the end of the month the price closed at 210, right? So price closed at 210. Now let's take the same price on May 1st. On May 1st, what happened? The price of the rice per kg is 210. So you see the price of kg was 210, and then what happened? There was decrease in demand. So there were less buyers. They all, like many people already bought the stock, or let's, for example, the lockdown was over, and there was no much demand. Only normal people were coming to markets. So there were less demands for the rice, right? So then what happened? There were so many sellers in market. So there were so many sellers in the shop. There were so many shopkeepers selling the rice, but very few people, no people were there. So demand in rice decreased. So what happened? This is May end. At May end, the price came back to normal 200 per kg. So in this case, what happened in the month of May? Price went from 210 to 200 at the end of May. From May 1st to May 31st, price went from 210 to 200, which means minus 10 rupees decrease per kg in the month of May 1st to in the month of May, from May 1st to May 31st. Now you have seen that the price decrease in the month of May will represent it in the candle how it looks. So in this case, there were so many sellers but less buyers. Only shopkeepers were selling the rice, but there were no customers to buy the rice. So now what happened? This price came back to normal price. Just like how a Uber, the price reduces when the demand for the rides becomes less, right? Same way, we'll represent it in a candle. Now see what happened. So in a red candle, the opening price will be in the top, right? In the green candle, what we saw, the opening price was in the bottom. It was in the bottom, right? Now in the red candle, which is called a bearish candle, the price is at the top. The price opened at 210. A small peak came at 2. It went back to 215 with small buyers, but then with few buyers, the price went to 215. But after that, nobody was interested in buying rice, because it came like for example, the lockdown was lifted and people are coming back to normal life, and they were fine buying rice anytime they wanted. So there were sellers with so many rice stocks in their shops. So with increase in sellers, because sellers were more, what happened? The price came back to a low price of 195. And when it reached 195, few buying pressure came. Small buying pressure came, because when things become cheap, people try to buy it, right? That's what happens in stocks. When a stock price becomes cheap, investors come and buy the stock so that they can make profit. So in this case, it came to 195, and people said the rice price is so cheap, so let's buy some rice. So the buyers came in and they made the price back to normal 200 price. So in this case, what happened? Price opened at a higher price, 210. It went back to 215, which was with a few buying pressure, but then after that no buyers was there, huge selling pressure came, and now it came to a low, was the low price of, which came to 195. 195 seems so cheap for customers to buy rice, so they bought so many rice, and now it came back to normal 200 price. So now that you've seen a bullish candle and a bearish candle's anatomy, the open, the close, the high and the low, just as we see in this example. So this is what we just learned, how a price went from open, this point is called open, it went to a low, and then huge buying pressure came, went to a high, and then came back to close, which was higher. Now in the bearish candle, this is bullish or decreasing in price or bearish candle. The price opened at a higher price. It opened here. Just remember that in green candle, this is called the close of that close price, meaning during that period of time price closed above. In this period of time where there is a bearish candle represents, in this period of time, maybe 1 hour or maybe 2 hours or maybe 1 week, a candle can represent any time frame. I'll show you the charts in the coming slides. So in this red candle, just know that the opening price from the top, it went to a high, and it with the selling pressure came to a low, and with a few buying pressure it came back to close price. So that's all about the basic of candle. This is the basic anatomy of candle with open in the top, because many people, even I was confused between red candle whether the open is in the top or close in the top. Now after you just remember that a green candle has opening price at here, closing price on the top. The red candle or the bearish candle, the opening price is in the top of the candle and the bottom of the candle is the close price. Baki this and this are same. Even this and this are same. Now we have seen this candle. Now let's see. So this is how the candle moves. So depending upon the number of sellers or buyers, the price will fluctuate from top to bottom, like goes down, goes up. So here you see this was a green candle, right? This is all a green candle, meaning the buying pressure was there. You see a red candle, it's because there was selling pressure. Now I'll just show you the candle. So this is a Reliance chart. Okay, so we know Reliance Ambani now has become the richest among the top 10 richest, right? I think top 5, yeah. So here we see that price. Just a second. So here we see in the month of July. So this whole July, yeah, this candle. Let me just mark this candle. So this, oh shit, 1 second. So this candle, wait a second. So this candle, you see, this candle, let's see what happened in that candle. So the price opened in July 2nd. You see the date is here, right? You see this date in July 2nd. The price of the Reliance share, one share price, the price of one share opened at, I'll just mark it. See, it opened at 964. Then what happened? There was a few selling pressure which made the stock price or the share price of Reliance go from 964 to 945 with around like 20 rupees difference, almost 20 rupees difference. So it came to minus 20. Then investors saw that this was a good price to buy, or maybe there might be good news for the stock, for the price or for the company, or there might be like, they made a good deal, or they had a good earnings report, like, they also bring out like monthly earnings, right? Quarterly earnings or yearly earnings. They might have come and they saw that they have given good results in like the profits and all. So what happened, from 945 rupees of per share, it went to a high of 100 179 rupees. So buyers were so strong. There's so many buyers, huge buyers came in the month of July 2018, that the price of the stock went from 964 to 1194. So that was almost 200 points more, 200 rupees move per share. So that was a bullish candle, a buyer's candle, or a green candle. And we see that the price went to a high of 1179. It came back to a bit reduced price of almost, you see, I'll just zoom in and show. So you see this, you see it came to, yeah, this was the closing price, and the closing price was 1174, around small price difference of 5 rupees. So that was a bullish candle. Now let's see a bearish candle of the same stock, Reliance. Now let's see this candle. You see this red candle? Okay. So in this red candle, what happened? The price, just mark it with red. So the price opened at in the month of, I'll just show which month. So this was 1st October. So that was after July, August, September, October. After 3 months, on October 1st, 2018, the price opened on 1st October. The price opened at 1245, and there were huge sellers. There were so many sellers selling the stock. Huge sellers came, maybe because of bad news, or maybe, like there might be tax issues or any bad news flow, or maybe profit booking. So some people who might have bought at this point, they might be selling the stock at this point to book their profits, right? So the price of the stock at 1st October opened at the price of 1245. Then the price came, or it fell hugely to a low, which is around, so it came to a low point. You see this low point, a low price, it came to 1005, which is almost 200, again 250 points move or 245 points move. And then it went a bit up, and it closed at, in the month of October, it closed at a price of 1051. So if you see the movement from this point to this point, it was around 237 points move, then it came back and it closed around 195 points below. So that was decrease in the price of stock. So that was, sorry, so that was negative 200, minus 200 rupees per share decrease, minus 200 rupees. All right. And here there was increase of plus 200 in the month of July, and in the month of October, minus 200 rupees decrease per share. So that's how a bull candle or a bullish candle or a bearish candle anatomy works in the chart. Now this is just a month of May, right? Now there might be so many traders, like swing traders. Swing traders meaning that some people hold the shares for maybe few days or few weeks or few months. So they are called swing traders. So they'll use higher time frames like month, because they are holding it for 2 days or 3 days. They'll see for like 1 day chart. So these are the time frame which can be used. So there are so many time frames: 1 day, 2 day, 3 day, 1 week, 1 month. And we as intraday traders meaning they buy the shares and they sell the shares at the same day. So we traders use like 5 minutes. So in that 5 minutes, we'll see how the price moved. Uh, we'll see the last day, that is today. Sorry, not today, 2 days back. Today Sunday, the markets are closed. So the price on 28th, yeah, so this was one whole day in 5 minute chart. So this was one whole day in 5 minutes chart. Let me just reduce opacity. Yeah, so this was a red candle, so small red candle. So the price opened here, went to a small peak, and then came down and then closed here. The next candle, what happened? Price opened low. In this case, price opened higher. Sellers were there. They reduced the price of stock to a lower price. In this candle, the price opened here. The price came down, but at this point, what happened? At this point, around 2106, you see that price over here, right? There was 200 and around 1000, yeah, 2106 or 5. The buyers came in and they increased the price. They increased the price and made a small peak and then closed there. Again, the buyers came in. So in this 5 minutes, this is a 5 minutes candle. You see, it's 5 minutes. So in that 5 minutes time period, the price opened here, went to a small bottom, and then it went up and closed. So like this, the whole day price kept on moving. And intraday traders, what they do, or day traders, what they do, they buy the stock here and they try to sell it here. So they'll try to capture the small moves, like 10 rupees moves. They'll buy in huge quantity. All right, so they'll buy in huge quantity. So what happens? So what happens when they buy in huge quantity? Even with the 10 rupees move per share, they can make good amounts of money, right? So in this case, you see, in that day, from 2106, it went to a high of 2133. So that was almost 30 points move, almost 26 points move. Yeah, it was almost 26 points move. So this was 5 minutes time period for one day. So from here to here, it represents one day. So if you see the same candles in one day, the combination of all these candles, all these small candles, led to a total of combination which led to a a red candle for the whole day. For that particular day, 28th, you see, this was a candle. So this candle was one day candle, and in 5 minutes, this one candle was represented in multiple candles. So here the price opened at 2120, came down. Sorry, first it opened here, it went up, then it came down till 2107, and it closed at almost 2116. So a small difference. So this we can say the buyers and sellers fight the same. So they were equal. It's like a normal candle or indecision candle, means buyers and sellers were almost in same in power. So they couldn't increase the price too much for that day, or they couldn't decrease the price too much for a day, because you see, open and close were almost the same. So open and close were almost the same price, with some around 2 rupees or 3 rupees difference. Fine. Now this same candle, you see, this same candle was what we saw in 5 minutes time frame. So that this 5 minutes time frame, from 28, from this part to this part, is what we see on that single candle. Combination of all these candles became a one candle. Same implies for 1 hour or one day or one week. It includes all the combination of the smaller time frame candles. So that's all about the candles and basics of it. Now let's see the types of market days. So there are three types. Almost a market moves in three types. One is uptrend, called the bullish move, or the buyers were strong. A downtrend means sellers were more, and it's called the bearish day or a bearish trend. And sideways means price just stayed in sideways, neither moved up or neither moved down, but stayed in one same range, like this. Buyers and sellers are strong. Buyers came here, sellers came here. Buyers came here, sellers came here. So we'll see one more types. So this is the uptrend. So in uptrend, there was a low, it made a higher high, then it made a higher low, right? Because compared to this low and this low is higher, right, compared to this low, and this higher high and this higher high. So this higher high is higher than this higher high, right? So this price here maybe 200 and this is 300 and came down and went up to make another high of 400 and it started at 100. So in stock markets price don't move like straight up. It's not possible. It doesn't move like that. Almost most of the time it doesn't move like that. It makes a low, it goes up, it gives a bullish move, also called impulsive move. It's also called impulsive move, or it's also called as expansion phase. Expansion is also called expansion phase. Then this is called retracement. It's called retracement or a contraction. Contraction. So expansion opposite is contraction. Impulsive opposite is retracement. Retracement. So alright. So the in this it made a higher high and higher lows and higher low. So that's called uptrend. See, this is the same Reliance stock. Here the price went up, it came down a bit, called retracement. This is called the impulsive move or the bullish move. Impulsive move, and this is the retracement. Again, price went up. This price and compared to this candle was higher, right? Made a low, it made a high, so this is called the high, higher high. Then it made a small low, then it made a small up move, small low, then up move, and small low and up move. See the price of the stock. In this case, this was Reliance stock. Price came up, it made a retracement, it made a higher high, a retracement, again a higher high compared to this high. This high was broken, bullish candle, and made a retracement. It went high, retracement went high, retracement went high. So that's how a uptrend is, uptrend market or bullish market. Now let's see the downtrend. In downtrend, the price comes from low. This is high. So let's say this was 400, it came down, and let's say this price, the low was 300. It made a lower high because compared to this high is lower, right? So maybe this can be 45, 450, sorry, 350. So it can be 350. So 300 went to 350. Then again there was an impulsive down move, and this is again this longer or the longer trend or the longer phase or longer line or a downfall is called the expansion phase in this, which is exactly opposite of the uptrend, and this is called the contraction. The small upmost contraction, the big downfall is the expansion, and this is this thing you see is called contraction. So made a lower low, lower high. Again it came low because this low maybe 200 and this was 300, this was 400, it was the high, came down, came down, came down, came down. So it gave a move like this. That's how always markets move. So you see this is again the Reliance stock, and during some period of time there was a downfall. It made a small up move and then again a fall, then small up move, then again a huge fall, then again up move. So this was the high, this was the lower low, this was the lower high, and again it came down till here. This was another lower low. It made a small up, lower high, and it came down, huge fall, it came to lower low. So this was downtrend or bearish market, or also called downtrend. So that's about uptrend and low or the downtrend. Now let's see sideways. So sideways markets are like, the price is, if you see this part of the time period, the price just stayed in one moment, like same price, maybe like 20 rupees difference for the whole period of time. Maybe it can be 1 hour, this can be or it can be 1 minute, or it can be 1 day, or it can be 1 month. prices stayed in that same price range between 100 and 110. So consider this upside as, and this is 110 and this 100 and 100. 110. So the buyers and sellers were fighting almost equally. So sellers came here, then buyers came here, sellers came here, buyers came here. And when a breakout happened from this range, when a breakout happens, it gives another move. So in a market, whenever there is an uptrend, there will be a time of sideways. And once the price breaks either this side, or if it breaks this side and makes a low and then a lower high, then it's called a down phase, or it's called bearish market. Or in another case, if the price is going up and there is a sideways, and if the price breaks out this region, this range, between this range and continues its next uptrend, so in this case it's called the uptrend phase. So whenever market makes another up move, it always consolidates in the same given range. It consolidates, called consolidation phase or contraction phase. You can talk you can use any word. Just know that whenever a market moves up or down, it gives an up move, then it consolidates in a period like this. So it consolidates. Once the price breaks from this region, either the up or down, if there were more buyers, the range will break and the candles start moving up, or the price will start moving up. Then it will make another phase. If the price either breaks down or up, it depends. If it breaks down or comes from the region in downways, then the sellers are more and the price keeps on coming down. So next, this is all about the three types of market, and we have studied the basics of candles and the anatomy of candles, and we have seen how the price reacts based on number of buyers and sellers, and we have seen the types of market like uptrend, sideways, downtrend. Now we'll see the reason for increase in price. So there can be many reasons for increase in stock price. Maybe investors with huge money are starting to invest, and because of huge buying order, the price of stock might have gone up. Or maybe there is good news. Maybe like their company might be investing, or they might have brought another good company for the benefit of their company. So it might be a good news flow, or they may be showing a good profit for that particular year. So because they showed good profit, the price of the stock can go up. Or maybe sometimes people like getting paid dividends, right, for the shares they hold. So if the company is giving like 5% dividends per share, 10% dividends per share, it's a good dividend payout, right? So people start buying more of those stocks, and the price of stocks will go up because buyers are increasing. Now we'll see what are the reasons for fall in price. So maybe investors are booking their profit. So for in this example, we see that the buyers who bought the stock price at 900, when the price reaches at 1600, which is almost double, nearly double the price. So investors start booking their profits, right? So they start selling their shares because they want to get the profit. So here almost double. So if they invested 1 lakh, so they'll be getting 2 lakhs, almost 2 lakhs here. So they'll start selling their shares. That's why you see the small downtrend. Now again, the because there was a decrease in price, which became a cheaper price for the company Reliance compared to the valuation. The price of stock was kind of looking cheaper, 1,500. So investors came in again. They bought shares here, and the price went up, and they saw that it was a good time to sell their shares and book the profits. So that's why price came bit down, just showing that the the huge investors, or the investors who bought the shares at lower price, are trying to book their profits at a higher price. That's why you see it was a sideways. And we'll see how one more thing we'll see is how the price moves actually in the actual real time chart. So this is how the price moves in real time charts. So see this price going up, down, up, down, up, down. So this is how the price react. It's right now I made it in a fast mode, but be based on the time frame we are using. So this is how the price moves, and we'll come back to both the reasons for fall and stock price. So maybe bad news came, the company might have faced some tax issues or debts, or maybe poor earnings, like, the company's profit was lesser as expected, or maybe the company's liabilities increased. So there may be many reasons for fall in stock price. Now we'll see candle types. So we saw that green means bullish and red means bearish. So we'll see what each candle shapes represent. So in this you see there are no wick. There was no wick. So that means the low of that candle and the opening of the candles was same. Why it couldn't go low? Because there was zero sellers. The sellers were zero, or there were no sellers, and only buyers, because only buyers were there. Price of the stock, which was at a low, which was the low of that particular period of time, and is also the open price. The price went huge, gave a huge move, went up, and it also didn't give any wicks in the top. There is no wicks in the top because there were no more buyers, and there were no more sellers also. So there were huge buyers only. Because there was only buyers only, there is only, we can see a huge candle which is only body with color green. We'll see that in a live example. So in here, we'll look for candles like that. Yeah, this candle is almost similar. It's almost similar to the candle. The small wicks, which is negligible. These small wicks are negligible. You can just ignore it. So this is the candle where there are so many buyers. Even this also is small candles, like small wicks. You see there is very small wicks here, also small wicks. So this was only buyers. Now we'll see this candle. So this candle means it's the second most bullish candle. It's also called pin bar. This candle is called Maribuzu. I don't know the spelling, but I think it's called Maribuzu. It's called pin bar. This means what? This is the low of the candle, and this is the high of the candle, and it's also the close of the candle, and this was the open of the candle. So price opened here, it came down, suddenly a huge up move, meaning that this at this particular point, or at this particular price, for example, there was huge number of buyers who are willing to buy the stock at 100 rupees, which made a huge up move, showing that this is a rejection. It's called a rejection candle because price got rejected at 100 rupees. So at 100 rupees, the price got rejected and gave a huge up move and closed at the high. So that's what is pin bar. I'll make separate videos on each candle just for this. Just know that the types of bullishness. So in this is a normal bullish candle, normal candle, and this is a neutral candle, means no bias. We can't decide whether it's bias or stronger, sellers or stronger. This is a least bullish, meaning there are so many sellers, because that's why when the price came to 200, for example, there were so many sellers sitting over there to sell the stock or sell the shares, and immediately the price came down and it closed here. This was the low and open. The body is green because the price of the stock closed above the low. So this was the close, and this was the low of the candle, and this was also the open of the candle. So that's how bullishness is determined by the candle shapes. We'll see this candle. You see this candle. We'll see one candle over there in the chart. Yeah, you see this candle, that is a pin bar candle. So the price opened at this price, and this price opened at this price at around 1 I don't know the price, but just when it opened here, it came down at this price. Buyers came in, pushed the market or pushed the price up, and it closed at high price, high of that candle. So now next see a normal candle. So talking about a normal bullishness, yeah. So here you see it was a normal candle. So a normal bullish candle, like normal buyers were there in this candle. So and next is neutral bullish means that we can't decide whether there are only buyers or sellers. So we'll see one example, live example. Yeah, yeah, here in this case you see the price opened and closed at the same. So open and close were same. So open was equal to close. That's why the price is a thin line, you see. So the price opened here, sellers came and tried to reduce the price, but there were so many buyers here, which in turn made the market go up to this point, which is the high, and there were sellers also sitting there, and they tried to push the price down and closed at around the opening price. So opening price and the closing price were same. So we can't decide whether who was stronger or who was weaker, or just a neutral candle. So that's why it's called as neutral candle. Now next, least bullish. So there we see a least bullish. You see, it's even if it is red color, it doesn't matter because its meaning itself is least bullish. Let me see. There's green color. Mm, yeah. See, this is least bullish. The price opened here, it went up till here. At this point, sellers were there and they pushed the market down. The price opened here, sorry, the price opened here, went up, and sellers came and made the price close at a bit higher price than the open price. So same thing goes for the bearish candle. Here the candle opened here, and immediately the sellers were there at this point, maybe 200, and sellers were more, they reduced the price 200. Next, this is the second most bearish. Normal bearish is neutral bullish, and bearish and least bullish. So that's all with this basics of candlesticks and how to read candlesticks. And I'll make another price action videos, many more videos of that which I'm planning to bring in. How to read all these candles, like individual candles. I'll be making videos on it. So thanks for watching. I hope you have learned something from this video. I know it's becoming a long video, but if this video gets 20 likes, I'll come with easy strategy which anybody can make money by trading. It's a beginner strategy. Okay.